Welcome to our weekly macro and strategy update. With all eyes focusing on the upcoming US presidential election on November 3rd, we would like to give an economic assessment of the Trump presidency. While we do not take any political viewpoints, we would rather focus on the pure economic statistics. The main economic policy plan by President Trump encompasses three main pillars: tax cuts, deregulation, and a notable change in trade policy. If we want to assess the impact on the economy, let's first look at the total output of goods and services. So first, the US economy grew on average 2.5% during the first 3 years of the Trump presidency. This is clearly below the initial self-proclaimed objective of 4% and more, but it does represent a small increase relative to previous growth rates. Of note that in an international comparison, the US economy did grow stronger than many of its peers. Indeed, US growth surpassed its G7 peers or the broader OECD average of 2.2%. In sum, the US economy did marginally better than others, and growth rates accelerated modestly. Now looking at the economic effect of cutting corporate taxes, this did increase corporate earnings and is certainly one reason why stock markets boomed. But economically, there's little factual evidence that business investment relative to GDP increased during that time. Quite the contrary. Also, more frictional trade policy is weighing on business investment. A third point is the labor market. It is true that in 2019, the U3 unemployment rate reached a 50-year low. Looking at the average income of an American family, it is also clear that until 2019, the median household income did increase. Additionally, and importantly, it is the bottom quartile of the wage spectrum that rose significantly during that time. In other words, the lower income part of the population got a larger share from the total wage income cake. Another point is fiscal policy. Huge fiscal deficits were accumulated until 2019. Even before the current crisis, the US budget deficit widened much more compared to other G7 economies. In addition, the US is the economy with the largest fiscal stimulus package currently put in place, both in absolute and relative terms. The impact of the higher debt burden will not go away soon. With this assessment, one can conclude that overall, the US economy looked, in international comparison, quite solid until last year, just before getting into the current health crisis. With that, we wish you a very good week.